What's up, guys? Today, I'll be showing you a price action strategy with trendline that they don't talk about often. I don't even know why they don't talk about it often. Well, I know a lot of people like holding information, but I'm here to spill the beans. And I want you to follow through the video and watch this strategy, and it's going to change your game a lot. Um, there are so much to talk about. There are so much to show you on this channel when it comes to stock and financial market trading. So I want you to stick around, subscribe, and like the video. Now let's go on my screen to see this powerful strategy that has to do with price action and trend line and how you can use it to make a lot of money from the market.
Let's start with gold, okay? Because I actually short gold last week and I made about $800 from shorting gold. So I'm going to let me analyze gold and show you what I mean uh, by how I use the strategy to actually short gold. Okay, so I'm on a weekly time frame here. So and here I mark this resistance. If I'm going to mark support, I'm probably going to use this place, but I didn't bother because I wasn't really looking to buy. I was actually when after paying attention to the market. Anyways, I'm only looking to short the market, so I'm not really looking to buy because the market was already here. So, but there is something let's go to daily time frame so that I can show you the main thing. Okay, okay, here we are. So, if you look at on a daily, if you look at the market here now, the market is at this support resistance level rather, and there is something about the market that you need to understand. Price action. Market actually moves in three different ways. Okay, either sideways. Let me get my marker and show what I mean by that. Sideways. Let me use red line. Okay, sideways like this. Okay, market move sideways like this, and market can also move in higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. This is what we call uptrend. Okay, and market can also move downward, which we know as downward trend, a kind of lower high, okay, lower high, sorry, lower low, lower high, lower low, lower high, lower low, lower high, lower high. Don't mind my drawing, please. So this is a downward trend, this is an upward trend, and this is a sideways trend. Okay, so now if you look at this market now, is let me clean all this rubbish. Okay, so now if you look at this market now, you see it's moving in a higher high kind of movement. Okay, now one thing about the market is the fact that when market moves, okay, in higher high, and how you get to know that the market is exhausted is what the price action is actually telling you. Take for example, I will have to bring out my marker again. Let's say the market is moving like this: higher high, higher low, higher high, higher low. Sorry, let me move this from higher high, higher low, higher high. Then all of a sudden, okay, the market make higher high, it now form a lower high. Okay, it didn't get to this level. Now this is what we refer to as head and shoulder pattern. This is the first shoulder, this is the head, and this is the second shoulder. Now if you see this kind of pattern, it shows that the market or the buyer are becoming the sellers are coming into the market. So as a price action analyst, as soon as you realize that the market failed to make another higher high, this is a sign. As soon as you realize, as a price action trader, as soon as you realize that the market fails to make another higher high, this is an example that the market is the sellers are coming into the market and they are taking the buyers out. If you see the this pattern at the support level or resistance level, yeah, a resistance level rather, sorry, um, then you can be looking to short the market. Now, but before you short the market, now put your trend line, okay? Put your trend line. And when you put your trend line, as soon as it breaks, ordinarily, I won't put my trend line here, okay? I won't put my trend line here if I want to trade this market. As soon as I see this, I see this. The only reason I will put my trend line here is if I notice something between this high and this high here. And that is another video entirely. There is a way you can actually detect if the market is becoming exhausted from this high and from this high. Okay, that is when I can put this trend line here. And I think as far as this market is concerned, that is what I saw before placing my trend line here. But if I do not see it, if I do not see that, then I will be waiting for the price to show me that the market is actually is actually exhausted at this point. That is by waiting for either a double top, because the market can actually come here and make the market, this point can actually move and come to this level with this high here before coming down. That is a double top. That is also to show you that there is a fail, the market failed to push higher, and that shows that the sellers are pushing the market down. So that is another way. We are still going to talk about the double top, but now let's talk about the head and shoulder pattern at a resistance level or at a support level. In this case now, it's at a resistance level. So what I do is I put my trend line here, and funny enough, I didn't see it when the market breaks, because if I see the market when it breaks here, I will definitely take my short and put my stop loss above this level. I'll put my stop loss here, and I know it's going to retrace, but definitely it's not going to hit my, then I will take my um profits around this level. But as you can see, the market eventually, when I came to analyze, when I came to check the chart, I realized that it has broke out and then it's making a retracement. Then I put my trend line. As soon as it breaks the trend line, then I take my short. If you go to 4 hour now time frame, you are going to see this stick clear. So let me go to 4 hour time frame. Okay, now look at the whole thing in 4 hour. This is beautiful. So you can see the first shoulder, head, shoulder at my resistance level. So as it had it been the market, I saw the market takes this break here, I would have taken my shot. But that is if, like I said earlier, eh, I am able to identify that the market is already exhausted at this point. Okay, so I saw the market retracing back here, so I put my trend line. So as soon as the market breaks my trend line, I put my stop loss above, and then I was targeting this level here. I would have put it here, but I feel this place is significant as well. So, and I cut all this and make about $800 on gold. All right. So if I want to capitalize on this again, I can put my stop, my trend line again. I can actually put it here too, and also take this trade, Now, two reasons why I will take this trade is because if I check and I realize that the market is already exhausted here, okay, and I see this kind of another small head, you can see what I was talking about. This is another head and shoulder at a support level, here. You can see this is first shoulder, this is the head, this is the second shoulder, okay, and the market broke through and then started selling, okay, okay. So that is it. Now in this case, I will not take any trade because I can see the market breaking through my trend line. I won't take any trade here. The reason being that I have already checked to see if the market is becoming exhausted from this point, but I can see the market is still strongly in an uptrend. So the market is likely to use this place as a support level and then retraces back this place and then continue forward. Okay, so until I see either a kind of price action, a double bottom, a double top, or a head and shoulder pattern that signifies that the market is becoming exhausted then and we want to short the market again. So if you incorporate price action and trend line, oh my goodness, you are going to catch nice trade. Only this trade alone, if you check the pips, you can do the math yourself. You can check things out. I took this trade and I made a lot of money from it, just from this trade alone. So that is for good. Now let me show you uh the other commodity that I traded, which is uh crude oil. I traded crude oil too. This is crude oil. Okay, so I traded crude oil as well. But let me show you what I saw before taking this trade. Okay, let me show you. This is on a daily time frame. Let me show you what I saw. All right. So for crude oil, okay, um, I saw, because this head and shoulder pattern of the thing that I keep talking about may not be perfect. It doesn't necessarily that it's going to be balanced, but I can see that what the market is, just what you just have to understand is what the market is saying. If you notice, this is my support level, here is my key level, this is, sorry, my resistance level, and this is my support level. Now the market is making higher high, lower high, higher low, higher high, higher low, then it got to makes another higher high, higher low, higher high, then it make another higher low. Then what happened? The market failed to push up to form another higher high. Instead, it makes a lower high. Okay, makes a lower high. But in that case, forming what I will describe as head and shoulder pattern. One here, this is the head, and this is the second shoulder. Now, you may be wondering, oh, it's not balanced. Yes, it doesn't necessarily have to be balanced. Okay, sometimes one will be we be higher than the other, so it doesn't matter. It's not going to be perfect. All right. So now, what now happen is that as soon as I see this, it tells me that the market is struggling to push forward. However, I don't just take this trade. Okay, there is still another confluence that I have, other confluence that I put together. I put together to make me understand that the market is about to turn. At this point, I already know that the buyers are already taking their profit and they are stepping out, and sellers are already stepping in. I already know from this point to this point. I already know. Okay, and that is what I'm going to talk about in another video. Another way to actually identify this thing. I have an indicator, special indicator. That is the only single indicator I use. I rarely use indicator. I don't use indicator. I don't use any indicator. As you can see, my chart is clean. I don't use any form of this thing. So I only use just one indicator. So that indicator, from that indicator, I will first identify if the indicator will actually show me if the market is exhausted here. Then I will be waiting for this the price to tell me as well that, oh, okay, this is the next thing we are about to do. So I put my trend line. Ordinarily, I would have put my trend line here. Okay, I would have put my trend line here. But the reason I don't put it there is because crude oil is one thing that I'm always careful of. Like, I don't just trade crude oil because it's very crazy. In fact, if you are a beginner, if you are a new trader, if you don't have enough capital to trade, please don't even come near oil. Don't even go there. I'm just using this as just to show you how to use price action and trend line together. And at the same time, if you professional trader that may want to consider using the strategy, may also, yeah, can go into it. But if I beginner, please don't go, because if oil should move a few pip against you, it can wipe your accounts. So it's very volatile. It's very volatile. So I won't advise you to trade oil. So despite the fact that I know that the market uh is already getting exhausted here, the buyers are already getting out of the market here, I want to see the price also give me that information. If truly what I saw here is going to work out, there I know that when it comes down, it's going to probably going to go up again. And If that fails, if it fails to break this high, then definitely I'm going to short as it's coming down. So that is what I waited for. So I waited for the market as it was coming down here. Normally, I know a lot of people will trade here who are trading trend line. We take their sell here, probably put their stop loss above here, above the candle here. And if that happens, if this retraces comes, then definitely it's not going to hit their stop loss. If they put it above to some reasonable extent, and then they're going to catch the whole thing from there. But the thing is, I don't have that capital to accommodate this drawdown. So I decided to wait and see the market retraces back. And then when the market got here, it started retracing back, and then I put my trend line here to accommodate it. So it keeps coming and started testing. It tests, it come here, go up, come back to test the trend line, go up. Then eventually the market broke this broke this thing. Sorry, my station is above like this. So it broke this, and then I enter my trade and then place my because I saw a lot of put my this thing here. Okay, put my stop loss above here, and then I captured this. Go to 4 hour, you will see what I'm talking about clearly. Okay, so the market here, I was able to identify the market. So this is my first shoulder, my head, choose any one or the area as your head, and then this place as your second shoulder, and I capitalized, I took my trade and then take it to this point. So when the market got here and started retracing and the break, get out from here, this is where I got out. So that is how to accommodate or use price action to price action and trend line to trade. Now, apart from head and shoulder pattern, another pattern that I trade apart from head and shoulder pattern is okay. So let me show you the second pattern. Another pattern that you can see is, let's say for example, the market is making higher high, lower higher low, higher high, lower higher low, higher high, just trending up, and then all of a sudden the market, instead of the market to make another higher high, it's form a kind of double bottom like this. So this place and this place in the same level. Okay, then in such situation the same thing is applicable. So if you put your trend line here, as soon as put your trend line here, as soon as it breaks, take your sell. This to shows that the market is exhausted, just like the head and shoulder pattern. And the same is reversed for downtrend. As soon as you see maybe the market making a lower high, lower low, lower high, lower low, lower high, lower, then the markets fail to make another lower, maybe form something like this, like a W, yeah, like this, you know, of the same level, then should be looking to buy. As soon as the trend line breaks, then try and buy the market. So the same thing applicable for uptrend. So this is basically how it works. Okay, so look out for this price action at support level, the head and shoulder pattern, support or resistance level. The same thing, the double bottom or double top. Look at them in the support and resistance level, and then when it breaks your trend line, take your trade. So if you try this strategy out, I can tell you are going to see some significant improvement in your trade. So that's what I have for you today. In my next trade, I'm going to show you how I'm able to tell if the market is already exhausted at a particular resistance level and it's about to reverse.
Yeah, I hope you enjoyed the video you just finished watching. See, let me tell you something. There are so many things about stocks and financial markets that a lot of people don't talk about online. Yeah. And I have decided to expose or talk about some of these things, show you the secret behind it, how the banks are doing it, how the hedge funds are doing it. So if you want to learn all these things, if you want to really, really learn all these things, I have nothing to lose. That's why I have nothing to lose. So I'm going to tell you the truth. I'm going to show you everything. I have nothing to lose. So if you really want to learn, if you really want to become successful when it comes to trading forex or stock market, I will advise you to subscribe to the channel, stay around, click the bell icon so that when I drop some of these videos, when I drop some of these things, you get to see it.